Hi everybody and welcome back to the channel. So since my previous update, there's a nice change in my portfolio. So I've sold out the rest of my Google position in full. So I sold this at a slight profit. So there's nothing wrong with Google, the company. I just feel that the stock is trading at close to its fair value, and I have other stocks that I want to buy. So if you want to see what that is, just stay tuned and we'll get into it. So I have two accounts. Account value is currently 24,393. So I have an RRSP for 1349. I did a little bit of a buy here, but I'll be getting into what I bought here towards the end of the video, since the TFSA has the majority of the changes for this week and both of them are slightly in the green. So let's get into the TFSA. So TFSA is up in the green slightly by 241.61, or up 1% all time. And we can see that big tech like Apple still doing really well in this market. So this is definitely a year of tech just rallying and continuing to rally. So one of the stocks I purchased with that sale of Google was Aritzia. So I purchased 4 more shares of Aritzia, going up to from 32 to 36 shares. I just think this one is pretty undervalued relative to its fair value, which I think is about 50. So I think that this is just a better opportunity for my money to grow, since I think that, Google and Aritzia will grow at a similar rate. I think Aritzia can actually grow a little bit faster, but it has a discount in the share price and Google doesn't. But that was just a small part of the money that I got from selling Google. And the main stock I really focused on was BN, so Brookfield. So I purchased 10 more shares of this, and there's a good reason for that. I think it's pretty undervalued, and the CEO, Bruce Flatt, also seems to agree with that as well, because he actually sold a lot of his BAM position to put into BN. So it really shows that he believes that BN is very undervalued at this time. And since the stock price rally in Google happened, I kind of just took advantage of the timing, BN trading down and Google trading up. And I just think that this is, again, another good opportunity, because they did grow their earnings by a good amount. Like the asset management side of the business grew by 15%. Overall, the business is doing fantastic. And the main worry is with their real estate portfolio. But again, the fact is that 95% of the properties out of the over 7,000 properties that they own are very high quality. So that means that Brookfield is very good at selecting quality pieces of office real estate, and some of it is good. And they also increase their net operating income for their real estate by 5% year over year. And comparing that to, basically any other office REIT in the market who have like declining occupancies, like declining occupancies of 15% year over year, and continuing to decline over and over again, because the quality of their real estate, the location of office real estate is probably the most important thing. So an office in the middle of nowhere, nobody's going to want to rent that, and those are mainly the properties that are at risk. So not too worried about Brookfield at all. They're going to continue to grow at a good rate, and they generally do hit the targets that they set out. So BN has a lot of potential. And with Scotiabank, they recently announced their earnings, and they gave a nice dividend raise of 2.9%. So that's nice for Scotiabank shareholders. So I'm getting an extra 3 cents a share every single quarter, $1.06 instead of $1.03. So that did raise our earning power from our dividends. and that's always nice to see. I'd say out of all the banks, EQ Bank probably had the best earnings, and then CIBC came in with a nice little surprise, but that's mainly just due to low expectations. And a lot of the banks had to put aside more money for loan loss provisions, so a lot of bad loans that they're anticipating just due to the uncertainty in the economy and, of course, the rising interest rates. So there is more risk of bad loans and people defaulting on them or companies defaulting on them. So the earnings were a little bit down, but overall, they're still making tons of money, and they will return back to form. So no worries there. So very happy to get the dividend raise. I purchased one more share of ENS, so a little bit more Enbridge in the portfolio, and nice over 10% monthly yield versus just holding common Enbridge stock. And I also purchased 2.3 shares of Granite REIT, so I reintroduced this back into my portfolio in the last update, and it's just a REIT I really like. Since that last earnings report, just really impressed me, growing their AFFO by 18% and decreasing their payout ratio by nearly 10%. Like, that's just fantastic performance, and it's just a REIT that I really like. So very happy to get this back into the portfolio and to build it back up. And I really don't want to sell it again. I kind of just want to hold it, and if the price does decline further, I would like to continue building this position higher. I kind of want to split this with my other REIT, which is Smart Centers, and kind of have them at 5% each in the portfolio for a total of 10% for my real estate allocation. We can also see Microsoft also enjoying a nice little pump as well. It's trading over $330 now, so anything with AI is doing very well. And with Smart Centers, I purchased 2 more shares, going up to 57 shares, just because it's hit a nice little dip here, and we're getting well over 7% yield on our money. And I think with the dividends that I get from this, I can, just feed them into Granite REIT and just build that into a larger position, since I have so little Granite. But I'll continue buying Smart Centers if it's going to be trading down, just get a share here and there and keep increasing our monthly passive income and keep collecting our digital rent. And with TELUS, I actually decided to do my purchase for next month, the month of June, and just do the 4 shares now, because this also hit a nice little dip of 6%. So, I'm planning to purchase 4 shares of TELUS each and every month until the end of 2023, just so I can drip this stock. So right now I'm earning about $23 for every dividend payment from TELUS. That can nearly buy almost a full share. So I just have to continue buying it consistently until the end of the year. They also recently had a nice little dividend raise as well, so that's pretty nice. And with TD Bank, after their earnings, the stock took a little bit of a dip into the high 70 range, so I bought 1 more share of that. So pretty nice to see. And with the RRSP, we're up 10% all time, so doing all right in this account. It's a bit newer than my TFSA, so I have 370 in the cash account right now. So Starbucks just paid me a dividend of $3.69, and the price has dropped recently, so it'll be nice to just reinvest this dividend right back into the company. And I have a similar strategy for SCHG and Vici, just drip these companies, and just they'll keep raising their dividends, and we'll just start compounding these over a long period of time. So I purchased 1 more share of SCHD since it traded down. So we got one around the $70 mark. And with Vici Properties, I also purchased 2.37 shares of this. So just, a little bit of extra money in the RRSP. I'm only really going to be adding to these when I want to add to one of these positions in particular. I just think SCHD looks very solid at these prices, and same thing with Vici Properties. So if you've watched the entire video, thank you very much, and please consider leaving a like and subscribe to the channel so you never miss any of my updates or any news that I have on any of my holdings. So dividends earned all time is 1441.67. Our annual dividends have increased by a nice amount over the previous updates, so from 1023.27 up to 1059.75. The monthly average has increased by over $3 a month, so from 85.27 a month to 88.31 now. Weekly, we're earning over $20 a week now versus 19.68 previously. And the daily average has also increased from $2.80 a day to $2.90 a day. So we are only 10 cents a day away from my $3 a day in dividends goal. So that's really nice to see that we're getting closer and closer to that. The months to earn $100 has also decreased from 1.17 months down to 1.13. And if the portfolio were to work a 40-hour work week, go to work basically for me, it earns 51 cents an hour versus 49 cents from the previous week. So a nice 2-cent raise from work. And as we keep depositing more money and reinvesting dividends, this number will continue to increase over time. And I've received my last dividend payment for the month of May. So we've received $80 this month versus $110 for the month of April. And if we look at the dividends year over year, first year 261.80, second year over 743, so almost a triple in our dividend income in 1 year. And then after 5 months, we have already reached 435.95. So, almost not quite a double, but it's 5 months. It's less than half a year, and we've almost doubled 2021, which is pretty impressive. So we are on pace to eclipse 2022, and that's why I just really like dividend investing, because you can observe the progress of your dividend income growing over time. And whether the market's up or down, I actually prefer when the market is down, just because I can get more shares and get a higher yield on my money and reach my financial goals that much quicker. All right, have a great day, everybody, and let me know what you're buying out there in the market.